Hello and welcome to AFM101, Introduction to Financial Accounting. My name is Dinesh Balakrishnan and I'm hopefully going to be helping you this term in trying to understand the importance of financial accounting to start off with. So, why are you learning financial accounting? I mean, what is the purpose? What is the purpose of learning financial accounting? Well, financial accounting, believe it or not, is a way of keeping score. So it enables a sort of scorekeeping. Again, this is just my definition of it. It's not necessarily out of the book, but it enables a sort of scorekeeping for companies to track to track their financial progress. Again, this definition is just in my own words. I'm not pulling this out of the textbook or anything. And what this scorekeeping enables essentially is decision making to allow for effective decision making. You were probably, if you had the chance to take, accounting in grade 11 or 12 in your high school, probably introduced to a couple of key terminologies throughout the time, like debits and credits, assets, liabilities, equity, and even probably heard of financial statements. So how do these companies keep score of their financial progress? Well, that's through the use. So financial progress through the use. So by using financial statements. And we'll get into a little bit more about different types of financial statements, what each does essentially. Like there's balance sheet, there's the income statement, what each of those are used for essentially. We'll cover that in the next video, but I just wanted to give you a bit of groundwork to understand why it is that you're studying financial accounting. I always believe it's important to understand the reason why you're learning something so that it allows you to understand essentially the direction that you're heading with it. I like to think of an analogy. So if I'm trying to quantify what let's say you have a sports team, right? So let's say you're talking about the Toronto Maple Leafs. Right? So we have the Toronto Maple Leafs, and we're trying to understand let's say you're the GM of Toronto Maple Leafs. You're trying to understand which players to keep, which players to get rid of. How do you know how one player is faring against any of the other players? Well, you check their stats, right? You check their stats to try and understand, how many, what's their scoring average, if they're a goalie, what's their save percentage. These are all different metrics that we could potentially use to compare one particular player to another particular player, and thus enabling decision making. So if we're trying to do the same for a company, if we have a company, let's say ABC company, then the only way we're going to know how we're faring against, say, our competitors, for example, is by checking our stats, which are in the form of financial figures, on financial statements, right? So things like your net income, you could look at your gross margin, you know, these are terminology probably you're not used to yet, but throughout the course of this term you probably gain a bit more understanding as to what these mean and what the relevance is to the scope of financial accounting. But there are several metrics that you can use to compare one company to another, thereby enabling decision making at a higher level. The one key distinction I want to make is that let me just write this out. In grade 11 or 12, if you had the chance to take financial accounting in those grades, you probably did a lot of what we like to call bookkeeping, right? So you probably did probably heard of, I don't know if these terminologies sound familiar or not, but let's say journal entries. You probably did, you probably heard of a general ledger and posting to the general ledger. It's okay if these terms don't sound familiar or anything, or if you have never taken financial accounting, please don't be confused by these terms. We'll be sure to cover these topics at a later date, but if these do sound familiar, notice the difference, that bookkeeping is sort of the mechanical aspect. This is sort of the, let's just say, the grunt work, although I don't like to use that word, but it's the more manual, labor-intensive task of tracking numbers, versus accounting, and in particular financial accounting, because we'll make the distinction to what managerial accounting is, and I think your textbook does a great job of making that distinction. But financial accounting uses bookkeeping, so it uses this, but this is more of a theoretical basis. So financial accounting is just, it's a framework. You have standards, you have regulations that you have to comply with. Bookkeeping is the mechanical aspect to enable the entire function of financial accounting. So if you have a business, you're likely to have one particular function called accounting. And you have finance, you have marketing, sales, you have logistics, procurement, various different functions in your business that enable your business to run, essentially. But accounting is sort of keeping the numbers, tracking the numbers, if you will. And so I also mentioned managerial accounting. So managerial accounting. Wow, if I can spell that'd be great. Managerial accounting. The distinction comes in who your stakeholders are. So, just change color there. Your stakeholders are who you, let's say, for example, this isn't the entire definition, but stakeholders are basically parties that have a stake or an interest in something that you do. So in this case, if we're comparing financial accounting to managerial accounting, the stakeholders are, for example, those that you report to. So report. And these could be individuals like you have creditors. You have managers, obviously. You have managers inside the company. You have there's several examples. Like you have the public, so you have shareholders who have invested in your company. You have customers, and you have suppliers. Now, why would a creditor want information, your financial information? Why would they want access to your financial statements? Well, how do I know if I've lent you money? How do I know that I'm ever going to get it back? The only way I know that is by analyzing your financial statements. And so, through the function of financial accounting, I will be supplying my financial statements. If I'm a public company, I'll be supplying these publicly, so my creditors will know exactly what my situation is and they can act accordingly. I want to make a distinction here because I want you to notice that some of these are internal and some of these are external. Now, if you have a moment, just pause the video, and I want you to try and differentiate each one of these, each one of the 5, either class them as internal or external. Go ahead and pause the video now and take that opportunity. Okay, once you've done that, we're resuming the video. So creditors, are they internal stakeholders or external? Right, so they're external because they lend you money from the outside. You have external debt, if you will, and they have a decision to make. So they're external decision maker, and they need access to your financial statements. Managers, well, they tend to be internal. Shareholders can be external or internal, but for the sake of this argument, to make this distinction, we can class them as external. Customers, clearly external. Suppliers, also external. So, in the realm of financial accounting, our major focus is on external stakeholders. Right, so this is for financial accounting. And if we look at internal stakeholders, that's managerial accounting. Okay? Now, your AFM102 course, which is Introduction to Managerial Accounting, will cover this in a lot more detail. But I just wanted to make this distinction right now so that where you're heading is focusing more on this side as opposed to this side. Although managers do require financial accounting numbers for sure, right? So we'll just go ahead and put a star here, but they're not necessarily external. They do require financial accounting figures though. Financial accounting is heavily regulated. Managerial accounting, it's not regulated that much. It's all internal numbers. You don't have necessarily have a reporting party that you're reporting these figures to. So there's a bit more leeway, I guess. There's a bit more flexibility in how you report these figures. But for the sake of understanding what financial accounting is, you're focusing primarily on external parties. As I said, we'll get into what type of financial statements there are in the next video, so stay tuned. But this is just to give you a bit of brief introduction into what financial accounting is, what the importance is, where you're heading with this course, and why you should bother studying financial accounting. Honestly, financial accounting, it might seem boring at first, but honestly, it gets a lot better. You got to focus on the fundamentals to start off with, but once you get into those important topics, you start exploring new concepts. I got to tell you, it gets exciting pretty fast. So stay tuned and best of luck. Take care.